The stock of Mahindra and Mahindra has been garnering a lot of investor interest, and not just from market participants or retail investors, but even the brokerage community has been talking about the stock for quite some time in the recent past. And today we had two global brokerages, Goldman Sachs as well as Macquarie, coming out with a rather bullish note on the prospects of the company and the way the capital allocation strategy has been panning out, how the subsidiaries have been performing, and of course the outlook for tractors as well as auto businesses. Let me highlight both of these notes one by one. First up, let's talk about Macquarie. They have essentially highlighted the volume recovery, the margin performance of the company, which has been ahead of expectations. Of course, Q2 numbers were also quite robust and especially driven by strong performance in the farm equipment segment. Subsidiary improvement is also on track, so that is also something that they've given it a thumbs up. They have talked about the tractor, LCV as well as PV recovery, which has been far better than what they had initially estimated. Auto recovery has been good, particularly tractors and LCVs, which is the small commercial vehicle segment, that has been doing fairly well. So these are the three key segments, and all three of them are witnessing solid green shoots. In fact, tractor segment is doing very well, and that's something that keeps them upbeat. Tractor margin, of course, is a significant positive. Their standalone tractor EBIT margin of about 24% plus in Q2 was a huge surprise on the upside, while factors like significant demand supply imbalance in favor of demand and lower travel and conveyance cost will normalize. Macquarie expects EBIT margin in the farm equipment to be around 22% odd levels in the ongoing upcycle. Like I said, improvement in subsidiaries are on track, and that's something that's also keeping them quite upbeat. Sustainability of tractor cycle is somehow still a bit of a concern for investors. Given the strong current demand, one is at this point of time wondering till when will the upcycle continue. So a bit of a concern being raised there. But overall, as far as analysts of Macquarie are concerned, they've raised the target or rather the revenue estimate by about 1 to 4% range for the next two fiscals, that FY21 to FY23. They've also raised the EBITDA estimate by 10 to 16%. They've raised the EPS estimates as well for the same period between 11 to 18%. The price target has also been revised upwards to 900 rupees from previous levels of 730, which they had pegged in their last note. And definitely they maintain their outperform rating, and they like its bottom-up ROS improvement story, in addition to auto recovery, and valuations also remain very under demanding. So Macquarie largely seems to be quite optimistic about M&M and the stock's prospects. As far as Goldman Sachs goes, even they have retained their rating on the company. They hosted Dr. Anish Shah. He's the Deputy MD and Group CFO of Mahindra and Mahindra. So they hosted him recently for their CIO India tour. Mr. Shah gave a lot of commentary, guidance as well as far as the company's performance goes. Management highlighted that demand remains robust across both farm and auto segments, with both seeing dealer inventory well below desired levels. In fact, earlier in the day today, Dr. Shah joined us on ET Now as well, and he talked about how robust the demand has been. Urban markets are also showing very solid comeback, and in fact he also said that over the next 6 months he expects the auto business to recover to the peak 2018 levels. So very strong comments coming in on that front as well. The company also aims to leverage its dominant tractor franchise to further increase share of its agri value chain, and that is something that's keeping the analysts at Goldman Sachs quite upbeat as well. They want to consolidate their leadership in the tractor segment with new platform launch. This new platform, which is called K2, has been developed in Japan. It's a technologically advanced one, and it should essentially help the company gain more market share, according to Goldman Sachs as well. So yeah, largely a positive note. They've maintained their outperform stance on this particular counter. The stock, however, was largely lackluster during the day. It did see a bit of a leg up during the second half of the session, but it settled completely flat. But yes, what essentially the management and brokerages are flagging off seems to be a very positive outlook and strong growth that seems to be awaiting the company, but let's see how things pan out. As of now, the recovery has been very solid. Good green shoots visible in the urban markets, not just rural, but urban areas are also picking up. So definitely good times ahead. At least that's what it seems as of now for Mahindra and Mahindra.